Welcome to our channel on accounting lessons with worked out problems. Brought to you by an experienced accounting professor with a CPA. We have videos on all topics of introductory financial accounting. Our focus is on step-by-step illustration of a problem, worked out on a whiteboard. Each topic also reviews concepts at the end if you need to brush up. Please do not forget to subscribe. The topic on current liabilities is illustrated in 3 separate videos, namely 1. Accounting of liabilities that are known, 2. Accounting of liabilities that are to be estimated, and 3. Accounting of payroll liabilities. Each video will also discuss the concepts after the illustration. This first video is an illustration of accounting of liabilities that are known. Take a moment to review the problem description. You will find it helpful to have a printout of the problem for reference, while the problem is being worked out on the whiteboard. Let us begin.
This is working out the problem on short-term liabilities. First, we are going to go over examples over liabilities with a known amount. First, a company borrowed $50,000 on February 1st of 2024. The annual interest rate is 6% and the loan is for 6 months. So they borrowed on February 1st. Therefore, the loan and the interest on the loan, everything is due on August 1st. So this is a known amount. Why? Because the loan amount is already given to you and also the annual interest rate is also given to you. So here, how do we account for them? So here, first one, the liabilities with the known amount. So we are going to do the entries for the first example of this category. So here, I'm going to do the entries. So first, the date and the accounts. This will be the debit. This will be the credit. So first, on February 1st, the company is borrowing $50,000 cash. So you debit cash for $50,000. And you will debit note payable $50,000. Now the note is due on August 1st, remember. So between February 1st and August 1st, you have 3 dates with quarter ending. One is on March 30 and other one is on June 30. Therefore, on March 31st, you have to do an adjusting entry to accrue the interest on the loan. So this is to accrue the interest expense, okay? So here, February 1st and March 31st, 2 months have passed since they have borrowed the loan. Therefore, the interest expense incurred so far would be $50,000 is the loan, and your annual interest rate is 6%. So this gives you 50,000 times 6%, the interest for 1 year, that is 12 months. So you divide by 12, that will give you the interest for 1 month. And then here you are calculating the interest for 2 months. So therefore for 2 months, the interest would be $500. Okay, so now they have accrued the interest. Therefore, you debit interest expense for 500 and credit interest payable 500. Okay, and then the next end of the quarter will be June 30. The entry will be the same. You debit interest expense and you credit interest payable. Now the interest from March 31st to June 30, the interest you have to accrue is for 3 months. So for 2 months is $500. Therefore, for 3 months it would be, this would be, again the interest expense will be $750. That is 50,000 times 6% divided by 12. now you multiply by 3 months, okay, which is $50,000 times 6% divided by 12 months times 3. 3-month interest, 6,750. Therefore, you debit interest expense 750, credit interest payable 750. Okay, now from June 30 to August 1st. That is, from June 30 to August 1st, it is for 1 month, almost. It's 1 month. So here on August 1st, this is the day everything is due. Again, you debit interest expense 250 because the interest for 1 month is 250, and you credit interest payable 250. And this is the time the company is repaying the loan and the interest. So on the same day, the company is going to pay back the $50,000 loan, $500 interest accrued here, $750 accrued here, $250 accrued here. So total interest is $1,500. So the total cash the company is going to pay is $50,000 loan plus $1,500 interest, $51,000. So you credit cash for $51,500, debit note payable for $50,000, and debit interest payable for $1,500. So on the payment, you debit note payable $50,000, debit interest payable $1,500, and credit cash $51,500. So this is one example on the liability with a known amount. Now, the second example is, sorry, the company is, this usually is applicable to companies that sell goods or services to the customers. There is something called the sales tax. So most of the states have tax levied on the sale of goods or services. So here the company is responsible to collect this tax from the customer and pay it to the state government. Okay. So the second one is company B sold goods to customers for a sale price of $50,000 and also collected 6% tax. So for the second example, part B, this is the sales tax. So here the sales tax rate is 6%. So here the revenue the company is selling the goods is for $50,000, and the customers also pay 6%. So here the sales tax collected from the customers equals 6% times $50,000. That equals $3,000. So the company is collecting a total of $50,000 and $3,000. So on the day they make the sale, they are going to debit cash $53,000, credit sales revenue $50,000, and credit sales tax payable $3,000. So this is the entry on the day of the sale. Now they have to pay this $3,000 to the state government. That depends upon the regulations. Depending upon how big the company is, they may have to pay every day or every week or every month or every quarter. So now when they pay this $3,000 to the government, they are going to debit sales tax payable $3,000 and credit cash 3,000. So these are the few examples on the liabilities for which the amounts are certainly known.
Now we will review the concepts related to accounting of known current liabilities.
These are the liabilities that have a life or term of 1 year or less. That means these liabilities should be paid off within a year or less. And they are also sometimes called short-term liabilities. Now, what are the different types of current liabilities? First, liabilities with known amount. So these are the liabilities where the amounts are known when the respective expenses are incurred. And some of the examples of these current liabilities with known amount are wages payable, taxes payable, interest payable, sales tax payable, and so on.
Thank you for watching. We hope we were able to help you with an understanding of accounting of current liabilities when the amounts of liabilities are known. The next video of this series will illustrate and review accounting of current liabilities when they are to be estimated. We have video lessons with worked out problems on all topics of financial accounting. Please do not forget to subscribe.